Markets head into Wednesday with a cautiously constructive risk tone, although positioning remains restrained ahead of US inflation data and Nvidia earnings. Wall Street closed higher on Tuesday as technology shares rebounded and lower oil prices helped pull Treasury yields down. Asian equities followed that lead overnight, with Japanese and South Korean markets advancing, while US futures are broadly steady ahead of important tests for inflation expectations and the AI investment narrative. The dominant macro driver has been renewed hope for de-escalation between the US and Iran. An unconfirmed report of a ceasefire incorporating freer navigation through the Strait of Hormuz, alongside indications that Washington may shift from military strikes toward sanctions, pushed Brent crude more than 2% lower. The diplomatic signals have reduced the immediate geopolitical and inflation premium, but confirmation remains lacking, and Hormuz traffic is still constrained, leaving oil vulnerable to sharp reversals. Gold, meanwhile, continues to hold near a three-month high, supported by geopolitical uncertainty, declining treasury yields, and broader concerns around government debt and currency debasement. In FX, the Australian dollar is the standout performer, reaching a 12-week high after July CPI accelerated to 3.5%, well above the 3.2% forecast, with firm core inflation driving a sharp increase in expectations for a September RBA hike. The US dollar is comparatively steady ahead of core PCE, where the annual rate is expected to remain at 3.3%, and the second estimate of US GDP also due. The euro is supported by increasingly hawkish ECB expectations after ECB Schnabel warned that inflation could remain above target for an extended period. The yen has received some support from stronger Japanese services inflation and speculation around a September BOJ hike, although the wide US-Japan yield differential remains a significant headwind. The Canadian dollar is underperforming as Washington considers additional tariffs following Canada's retaliatory trade measures. Overall, falling oil and bond yields are providing near-term relief for risk assets, but today's combination of US PCE and Nvidia earnings, followed by Fed Chair Warsh's at Jackson Hole later this week, leave markets exposed to a meaningful repricing of both interest rate and equity expectations. That's all for now.